Good morning. I guess it's after 12, so it's not quite morning, but it is still morning in Hawaii, right? And other parts of the world. Anyway, I hope you're doing good. I'm doing pretty damn good. Cannot complain. But I want to share with you today about inquiries. You know, I was looking at a couple Facebook posts this morning. People are talking about inquiries and how they affect 10% of your credit score. Last night, we went to the Jeff Dunham show. I don't know if you know who Jeff Dunham is, but he's the ventriloquist. Insanely funny. We went to his show, and then after that, we went to a dinner. It was pretty cool. I hung out with this guy named Joel. The restaurant closed at 10. We got there like at 10:30, and they reopened the restaurant for us, and it was quite the experience. The guy, just give you an idea, he, as of next year, will own the largest marijuana outdoor grow facility in the world. Over 1 million acres. That's right, 1 million acres of marijuana outside of Pueblo, Colorado. But it was cool hanging out with him. But we talked about credit, we talked about utilization rate, we talked about inquiries, and I wasn't sure what I was going to talk about this morning, and then I looked on Facebook and I saw some people talking about inquiries. And I hate talking about damn inquiries because they have no impact whatsoever on your credit score, but everybody's focused on the inquiries. So I thought, what the hell, let's talk about it today. If you're watching the video and you want to get a chance of winning some silver, all you got to do is share the video, tag a friend, and hashtag Fortress Credit Pro or Bad Credit is a Choice. So share the video, tag a friend, hashtag Fortress Credit Pro or Bad Credit is a Choice. I will also be giving away some of this. This right here is 1 ounce of 999 solid gold. What I like about silver is anybody can buy silver. I know the light's kind of shining in it, but anyone can buy silver. I mean, it's 16, 17 bucks an ounce. It goes up, it goes down, but it's generally less than 20 bucks an ounce. You can get these coins for 25 bucks. I recommend that you do not buy collectible coins unless you really know what you're doing. You want to buy it for the ounce of silver. So buy silver bullion. But the cool thing is, anybody can buy it. And if you buy essentially 100 of these, you can trade it in for one of those. About 16, 17 bucks a piece, 1,600 to 1,700 for one of these. But, put it on your budget to buy a little bit. The other thing you can do, and I don't know if you know this, if you have a 401k or a IRA, did you know you can self-direct and buy precious metals with your 401k or IRA? And I recommend that, and many experts recommend that about 10% of your portfolio should be in precious metals. And I'm not talking about Bitcoin because that is not a precious metal. That is in my opinion, an enormous Ponzi scheme. So that's cool. You won one. That's what you want, Kimberly, is the apocalypse. Cool. I will make sure that goes out. They actually go out today. We got our special envelopes in yesterday, so they'll start shipping out today. I'm giving away 5 of them a day for the rest of the month until I run out, and I have a lot, so probably won't be running out. But you can self-direct your 401k and your IRAs into precious metals, which is a good idea. Precious metals, and I'm not selling silver. I hope you guys know that. I'm not selling silver. I'm not selling gold. I don't make a commission off of it. It's just a way to hedge against inflation. 1 ounce of gold, this baby right here, 2,000 years ago could buy you a nice suit, a belt, a shirt, and a pair of boots. Today, 2,000 years later, This can buy you a nice suit, a belt, a shirt, a pair of shoes. So gold doesn't really go up in value. It pretty much just stays the same. Same thing with silver. Yeah, it fluctuates a little bit with the fiat currency, but it's not necessarily going up in value. All right, let's get to the teaching again one more time. If you want to win some silver or gold, share the video, tag a friend, hashtag Fortress Credit Pro, or bad credit is a choice. All right, so inquiries. I see it all the time. I saw it this morning. I looked at this guy's post, and all of the people were saying 10%. 10% of your credit score has to do with inquiries. 10%, 10%, inquiries this, inquiries that. The guy I was talking to last night, making tens of millions of dollars a year, worked for one of the largest stock brokerages in the world, just bought a Gulfstream 450. That's about a $20 million jet. So the dude's got money, right? And we're talking about inquiries and how his friend keeps applying for credit cards and his scores are low because of inquiries. I'm going to tell you something. Inquiries do not, I repeat, do not impact 10% of your credit score. That's bullshit. Now, I know where they come up with this farce that 10% of your credit score is inquiries. It's because on the FICO pie chart, it says 10% of your credit score has to do with new credit. 35% is payment history, 15% is length of credit history, 10% is new credit. That leaves us to what? 15% that has to do with types of credit. It doesn't say 10% is inquiries. Nowhere will you find FICO saying the 10% of your credit score is inquiries. It's hogwash, right? It is not 10% of your credit score. In fact, 90% of all inquiries are completely ignored by FICO. Let me repeat that. 90% of all inquiries are completely ignored by FICO. That's the company creates the credit score. FICO, the Fair Isaac Company. If FICO's ignoring 90% of all inquiries, then how in the hell do people come up with they affect your credit score in a negative way? It's because they don't know what the hell they're talking about. They just assume that that's what drove down your credit score because you applied for too many cars or you applied for credit cards and your score went down. Inquiries do not impact your credit score by 10%. So why does your credit score go down when you apply for new credit? And the answer to that is what one of my friends taught me he learned in law school. The answer to why does your credit score go down after you apply for a new credit? It depends. That's why. It depends. Now, what does it depend on? It depends on what scorecard FICO has you in. FICO has over 4,200 different scorecards. And depending on what scorecard you're in will determine if that inquiry impacts your credit score in a positive or negative way. You don't know what scorecard you're in. Your credit repair expert doesn't know what scorecard you're in. Your mortgage broker, your banker, they don't know what scorecard you're in, and you're in more than one. Only FICO knows what credit score you're in, or credit score, not scorecard, FICO scorecard. Only FICO knows what scorecard you're in. Now, why does it go down when you apply for credit? I can tell you, I can go apply for credit right now. My score won't go down one bit. Why? Because I'm in a low-risk scorecard, which means the chances of me being late on one of my bills over the next 24 months is extremely low. So if I get new credit, it's not going to impact my credit score in a negative way because I pay my bills on time. And I'm in a low-risk scorecard. People that don't pay their bills on time, that don't have a history of paying their bills on time, or don't have what's called a thick credit file, are in a higher risk scorecard. And because they're in that higher risk scorecard, the likelihood of them missing a payment over the next 2 years goes up. So FICO puts them in a high risk scorecard. Now, 90%, remember I said 90% of all the inquiries are completely ignored by FICO. There's another 90% rule with FICO. 90% of all derogatories, 90% of all late payments, charge-offs, collections, derogatories happen within the first 2 years of an account being open. 90%. So now think about that for a little bit. If 90% of all late payments happen within 2 years of an account being open, and you have someone applying for a lot of new credit, and they don't have a long credit history of paying their bills on time because everything is new credit, what do you think the chances of them being late is? Extremely high compared to someone who's gone 7, 8, 10, 15 years with not missing a late payment. And this is why inquiries impact certain people a certain way and others a different way. Think about it this way. Here I am driving my truck. I have a driver's license. I've had a driver's license since I was 15 years old. Actually, since I was 14 years old. I lived in Idaho at the time, in my shack, with no running water, no electricity. I was the dirty, poor kid of school. But in Idaho, you could get a driver's license, a daytime driver's license at 14 years old for farming. And it was to help help the families out. So I've had a driver's license now for 32 years. And in those 32 years, I've had one car accident. When I was 19 years old, I was working 3 different jobs and I fell asleep and I totaled my car. I don't work 3 jobs anymore. But in those 32 years, I've had one car accident. That's it. That was my fault. I've been hit by other people, but it was never my fault. Now, the likelihood of me being in another car accident, since I've gone 32 years, the riskiest time for a car insurance, when a kid's 14 years old driving, to now, at 46 years old, fairly responsible in my driving, right? I've had lots of training through the fire department and some other defensive driving schools. But the likelihood of me causing an accident or getting in an accident is extremely low. Add on top of that, I'm a pilot, which makes it even lower, right? Versus a 17-year-old kid or an 18-year-old kid. Who's going to pay the higher insurance rates? The 18-year-old, right? Now, if I had a bunch of DUIs and a bunch of speeding tickets and a bunch of car accidents, obviously I'm going to pay more, but I haven't. I've had one claim in 32 years of driving. So that essentially is like a scorecard. Is that making sense? So if I go buy a Bentley or if I go buy a Ferrari, my insurance is going to be much, much lower than if that 18-year-old kid goes and buys a Bentley or a Ferrari. Why? Because I've shown over 32 years I can handle this. I'm a responsible driver. And that's how you should look at your credit file. See, when you are brand new into the credit game and you get a bunch of inquiries, there's a higher likelihood that you're going to be late because 90% of all late payments happen within the first 2 years. Once you hit that 2-year mark, you've kind of graduated to the next level. So when you have an inquiry on your credit and you have a brand new credit card that's maybe only a year old or maybe even a month old, that's going to impact you in a different way than someone who's got a credit card that's 12 years old and he gets a new credit card. I hope that makes sense. So I want you to go out and share the good news, right? Share with people that inquiries do not necessarily impact your credit score in a negative way. It's your credit file that really impacts your credit score. And it's not inquiries. That 10% on the FICO chart is new credit. Nowhere does it say inquiries. It says new credit. Now, how can a new inquiry actually have a negative impact on you? Excuse me. Where I see this is primarily if you're trying to get the big reward cards with high credit limits, or if you're trying to get business credit for your business and you don't really have established business credit, they'll look at your personal credit and they'll look at how many times you applied for credit. That gives them a really good idea what's going on with your business. Because if you're a business owner and you're applying for a bunch of personal credit cards because you can't get it through the business because you haven't set up a business credit file yet, then that's going to be a higher risk for that business credit card. That's where you'll see that you might be declined or denied a new credit card based on too many inquiries. Now, generally speaking, this is kind of like their scapegoat. If a bank doesn't want to loan you money, a lot of times they'll blame it on inquiries. I'll give you a great example. I was in Wells Fargo earlier this summer, and as you know, Wells Fargo got in a little trouble for pushing credit cards onto their clients and signing up their clients, their customers, for credit cards without the customer even knowing, right? And that's why they're America's, at least the last time I checked, was America's most hated corporation. Think about that. Wells Fargo was America's most hated company. And I don't know if it's still true, but I still get a lot of hate from people on Wells Fargo. But they get paid a commission. Now, if you understand the game and you know they're getting paid a commission if they get a credit card, and you want to maybe encourage them to do other things for you, or you just want to help the banker because they're nice to you. So I was in there one day, and this girl's sweet and she's nice, and she'll see me in line and she'll actually pull me out of line, and I'll go back to her desk. She's a private banker, and I can deposit and not have to wait in line. So she asked me, would you like to apply for a credit? I said, you know what, you guys are going to decline me, so no. She goes, no, is your credit score bad? She knows it's not. I'm like, no, it's on the high 700s. We're making millions of dollars a year. We have no debt at all. No issues whatsoever, but you're going to decline me because I'm credit repair. No. I'm like, fine, whatever, because I know she's going to get a $50 bonus if she goes and approves, if she submits it. So I'm like, fine, whatever. At the time, I had almost $200,000 in my checking account, and I was applying for a $10,000 to $50,000 line of credit with Wells Fargo. Now, in my pocket right now, I have a credit card that I could go buy a jet with if I wanted to. It has no credit limit. It's one of those American Express metal cards. So I apply for this $10,000 to $50,000 line of credit, and a week or so goes by, and I get a letter in the mail that says I've been denied credit with Wells Fargo. The reason was too many inquiries on my credit report in the last 12 months. Too many inquiries. I had one freaking inquiry. One on my personal credit report. One. And they denied me. Who was the bank who did the one inquiry? Wells Fargo, a year ago when I wanted to refinance my house in Lake Tahoe to get rid of the private mortgage insurance. One inquiry and they turned me down. Now, does that mean that the inquiry made me have bad credit? No. That was Wells Fargo's scapegoat. The reason they didn't give me the loan is because I own a credit repair company. That's the reason. And there's this guy, his name is Barack Obama, who in many people's opinion did some illegal stuff with the operation called Operation Choke Point. Now, Operation Choke Point was Obama's way to choke out the industries that he and his constituents, the banks and the Wall Street banksters, didn't like. And they threw credit repair in with this bulk of child porn, payday loans, escort services, websites to sell drugs, and they threw credit repair into this Operation Choke Point to choke us out. Well, after that, they threw it out, and Trump has now gotten rid of that thing. But that's why Wells Fargo didn't give me the loan. They're happy to take the money. They're happy to leave the money in their bank account because they can use that money and loan it out to other people who want debt. But that's how the inquiries impact the credit score. And that's why I think a lot of people think inquiries damage your credit. It's because they're using it as a scapegoat. Kind of like, have you ever been broke up with? Someone dumped you? Someone dumped you. It's happened to all of us, right? Maybe you're the one that's dumping the other people. And there's that saying, hey, I'm sorry. It's not you, it's me. It's not you, it's me. See, that's the scapegoat, right? Why don't you just tell them what you're thinking? Because you want to not hurt their feelings maybe. Or maybe you just don't have the balls to tell the girl you just dumped why you're dumping her. Because her index toe's a little bit bigger than her big toe. Or maybe her thumbs are too big. Or whatever the reason is. But instead you say, it's not you, it's me. See, that's what the banks do when they decline you. And as Dave just said, discriminate against you. Well, they're not discriminating because it's not race or religion. It's they don't want to help a credit repair company, right? And they eventually will. Once you get to about $5 million a year, that all of those rules go out the window, or their prejudice rather goes out the window, because now they see it as a way to make money off of you. But it's not me. It's not you. It's me. That scapegoat is the same as, you have too many inquiries. We don't really have a reason, or we don't want to tell you the reason why we're turning you down. So they blame it on the inquiries. I'll give you another example. People with a 740 or higher credit score, especially in the 800 range, very few people have 800 plus, but they actually will be denied future credit cards more often than someone from like a 680 to a 740. So people with a high 800 credit score will many times be declined a credit card more often than the guys that's got a 680 to 740. Why is that? Because they don't want to loan the money to you because they know that you're just going to use their money and not pay them any interest. They're not going to make anything off of you. So they'll decline you or deny you credit, and they'll say, it's because of your inquiries. See, that's their scapegoat. It's because of the inquiries. It's not you, it's me. Right? They want to loan you the money, but they don't want to loan you the money. They'd rather give it to someone who's going to pay high interest rates. So I hope that helped you understand about inquiries. So inquiries do not impact your credit score 10%. That is garbage, or what they call a wives' tale. It does not impact you 10%. New credit impacts you 10% until that new credit is at least 2 years old. All right, 90% of all inquiries are completely ignored. 90% are ignored. They're only even looked at for 6 months. And then after a year, they don't affect your credit score at all. And then after 2 years, they completely fall off your credit score. Your credit report, rather. If you'd like to win some gold, win some silver, got some silver here. I am now in a parking lot, as you can see. We got some cool coins. Jason posted earlier. I think this is one of my favorite ones. This is like this dude with like a lion head on him. And then on the back, it's got this 3-headed pit bull thing. But anyway, if you want a chance to win some silver, chance to win some gold, isn't that beautiful? Look at that bad boy. That's the other side. All you got to do, share the video, tag a friend, hashtag Fortress Credit Pro, or bad credit is a choice. I hope you enjoyed today's video as much as I did. Make it a great day.